Hey everybody, what's going on? It's O'Reilly again with the Tessier team of eXp Realty, and I have my good friend Chris Lane here from Sunwest Mortgage. And today we're going to be breaking down Mortgage 101. We've had a lot of success in our past videos of just like talking about lending and how the mortgage process works. So I'm really excited to have you here today because I think it's important to really capture an audience that understands those people that think that they can't buy a home, which is so many people. Seriously, like a lot of our clients just don't even get started in the process because it feels like, it's just too big or too overwhelming, or the media has said this or that about buying a home. So we like to have these videos for our audience because it's, a misconception. So we like to break that down and really, get people back in the forefront of potentially buying a home, because it's really important to be able to buy a home and know what your buying power is. So you and I have talked, and I think it's really important to break down for just our general audience about this pie chart that you talk about a lot, because I think it's really cool, kind of the system that you've put in place on the application process. So, Chris, I'm going to hand it to you and just kind of break us down like what that looks like when you're like sitting down with a new client and walking them through what it takes to get pre-approved now.
Sure. So the whole adage is, the buyers wanting to ultimately get pre-approved. And so breaking down my little pie chart, pretty much just a Mortgage 101, which is comprised of the application, which is gonna collect 25% of my pie in terms of your employment. So that's going to be 2 years. Now, that doesn't mean you have to be on that job for 2 years. You could have been at 4 jobs, 5 jobs. The whole crux of that is a 2-year stable history without more than a 6-month gap. Now, for example, if you were employed to self-employed, unfortunately, we have to wait another year for you to get the 2 years of self-employment.
So that's 1099. Anybody self-employed with 1099 from a W-2.
Could be real estate. We work with Brendan. He had his 2 years. Then, you could have changed fields. They're not really making sure that you've been in the same line of work. For example, let's say somebody just got out of college. Mm-hmm. Well, guess what? Their transcripts are basically that work history. Okay. So they're an engineer and they didn't start, they don't have the work history, but now they have an offer letter. So we coincide their transcripts. There's 4 years to their employment. Okay. So, again, we could get into a little bit more detail down the road with some of that, because it's all relative, but the 2 years is very important. And we've done, lots of creative ways to try to get all that. So kind of, if you think about it from a resume standpoint, having a resume, I think, is super huge.
Okay.
The next 25 is credit. I think the misconception is focusing on a score.
Yeah, I agree. Yeah, like everyone thinks that their score isn't going to be good enough to qualify.
Not true.
Yeah.
We just talked earlier in our meeting, a 594 score. There was charge-offs, collections, you name it. But again, we'll get into a little bit more detail so we see how that plays into it. But the 25% is not 50% of this approval. It's not 75. So we're seeing that 25 of the 100% is employment, 25 is credit. Getting to the bigger part of the application, and where I think there's also a lot of confusion, is the other 50% of getting approval, meaning you're ready to buy, because we don't just want a pre-qual letter.
Right.
And unfortunately, so many people have been issued pre-qual letters and they thought they were ready to buy, and a week before settlement, 2 weeks before settlement, a day before settlement, I have to get that unfortunate call. It's exciting because I want to help them, but I have to have them restart and refocus a whole new process.
Why would potentially loans not get to the closing line because of that? Like they just don't have enough closing costs, or kind of explain that a little bit?
Yeah, no problem. So again, going to the pie chart, because, the most important thing, I never put somebody online without then following that up with a conversation or initially doing the application myself.
Okay.
I focus on, because if you think about employment's your ability to pay, that's the driving force for the qualification. So you have to have an income. Right? Credit, I can have an 800 score with one credit card. Okay? I could have a 550 credit score with, say, 3 positive trade lines and 6 bad ones. Okay, I can still work with that buyer.
Okay.
Okay.
That's awesome.
So then going into the down payment and closing costs, the minimum down payment for clients is typically going to be 3.5.
Right.
Okay. You could potentially get to 3%, but just for our purposes today, and as high as 5%. And so buyers are like, I have 7 or 8 grand.
Yeah.
And the problem is a lot of loan officers will issue that letter and then hope that seller credit or the money gets found. I've
For
never
closing costs.
Yeah.
Yeah.
Because they're not diagnosing that.
Right. They have the down payment, not the closing costs.
Every letter that I've ever issued, I accompany that with the quote.
Got it. Yeah.
Because then the agent knows too that I fully vetted those funds. But that's the most confusing part, is that the down payment's 3.5%. Closing costs can range between 4 to 6%.
And what are examples of closing costs, like for a general loan, like to buy a home?
Well, so let's just and what I normally like to try to do with my little Mortgage 101 to try to make the percentages, because the percentages can sometimes get nerve-wracking for buyers. So when we're talking 3.5 to 5%, or we say 6%, let's just use 10%. Okay, knowing that that's just a barometer and it's going to be slightly lower than that. So we're at $200K. I have my employment. My credit's shoddy. Okay, but I have my down payment and closing costs, and so that's roughly speaking for $200,000. I have about 20 grand.
Right.
Okay, or 25,000. That right there gives gives that buyer the whole notion that they're going to be okay, right? That they have a possibility of being able to buy that house. Now, let's just say that, the employment's not good, but then their credit's rock solid and they have the down payment and closing costs. Okay, so then there's going to be about a 75% chance, and some of the things we talked about earlier. But it's all a matter of looking at that whole composite
as a whole. Yeah, makes
right?
sense.
And doing the make sense and having that conversation, which is diagnosing everything that, maybe we're going to have to work on this, maybe we're going to work on that, or then, we'll run into the funding source.
Because I think people forget that, half of your pie chart could be from help, right? So what are the 4 kind of funding sources for the other 50% of that pie chart?
Okay, so down payment and closing costs, we said $200,000 is maybe $20,000. The buyer says I have 10. So there are no more funding sources other than these 4. So number 1 is you have the money, you have the 20.
Right.
Okay. If not, a gift can come from any blood relative.
Okay.
This can be step, this can be mother, grandmother. I don't think sometimes, and actually going back to the self for a second, so many people forget their 401k. It gets brought up all the time because they state in the bylaws of being able to borrow to be able to grab the money is a they call it a hardship. So they can actually borrow that money against their 401k. And that's the best way to borrow money, is to borrow it from yourself, right?
Absolutely.
So self, gift, the seller. If a house has been on the market, again, I have to be the educator, and I have to give them the possibilities. I don't want to be a Debbie Downer with it.
Yeah.
Because we've all found that this house has been on the market for 2 months, and now all of a sudden we can get our seller credit.
Sure.
And last but not least, so that they know that this is out there, is down payment assistance.
Right.
Okay. Whether or not it's our private label or it's the Maryland Mortgage Program, the whole crux of this is that as long as you have employment, you have credit, and you have a starting point, the whole thing with us is we're going to help navigate you through where your strengths and the weaknesses are.
I love that. I think that's really important. We talk about it a lot in other videos. It's partnering with people who have been in the business for a while, who have seen different, people come through with different backgrounds, different credit scores, different employments, and really working to get deals done. I think it's so important to have someone that really is going to take time, sit with you for a consultation, and financially set you up for the best version for you, right? Like not everything is the same. So what's one piece of advice that you would leave someone with that's really starting out in this process of potentially looking to buy a home? Like what's number one thing that you'd tell them to do right now to better their process moving forward?
You know, my parents never told me to save. I think that fortunately for somebody like me who fell into finance was just helpful, even for a guy like me, to learn about credit cards, to learn about car loans,
right?
You know, to learn about, you know, even though you have all these bills every month and you think that you can't have 5 to 7 or 10, have 2 or 3% taken out of your check for your 401k.
Sure.
Something.
Save.
Yeah. I have first-time home buyers that are in their 50s or 60s. I feel bad.
Oh yeah, I would
you know.
imagine.
So it's relative, and then we have buyers who've already bought before that still, when they bought, you know, it was when lending was easy.
Sure.
Right. So the pie chart is always going to be applicable. So just to recap, 25% of getting approval is having your 2-year job stability. If it's been a little bit of shaky and murky and you moved around a little bit, please get your resume together. Right?
Yeah.
Credit is relative. You know, I think the important thing is that if you've missed some bills, put auto pay. For $20 a month to make sure a bill's paid versus having your score drop by 30, 60, 90 points,
right? Yeah.
Just put it on auto pay,
right? Yeah.
Right?
Makes sense.
And know that credit today, you don't even know that to get homeowners insurance or if you get auto insurance, they're running soft pulls.
Right.
Yeah. You go to a rental office, they're doing soft pulls.
Yeah.
If your parents or nobody ever said credit, and if you've always been a cash buyer, I deal with that too. Riley, is so many people just always pay cash.
Yeah.
You're always going to need to rent the car. You're always going to need a credit card somewhere. Just have a couple. And if you have fair credit, if you don't mind me sharing, just some credit companies.
Yeah.
Credit One is a perfect start. A lot of times it's a secured card. Okay. It's $200. As you pay your bill and pay it on time, they'll increase your limit.
Okay.
And they'll give you your deposit back, and now you have a full-fledged credit card.
Oh, wow.
Okay.
Yeah.
Credit One, Capital One, Discover, Indigo Bank. They're all very helpful if your credit's been impaired.
Yeah, I started with a Capital One account, and that really significantly helped me too when I was, 17, 18, just getting started on my own.
Even if you have one, the whole key is to keep increasing your credit line.
Yeah.
Keep increasing it.
Yep.
Keep increasing it. 10, 20, 30, 40, 50 grand. It took me, I'm a little older than everybody, right? But the whole thing is you'll see that's more important to your score, because when you're talking about utilization, if unfortunately you only have $2,000, that's your high credit limit. When you're already at 1,000, your score's already impacted because you're at 50%.
Right. Yeah.
We could talk all day long, so we could
do this. That'll be our next video.
Again. Perfect.
We'll talk about credit and how important it is. But in
and
the
saving,
meantime,
and just that little
saving, very important.
1, 2, or 3%. It's crazy because I started late in my life with that.
Yeah.
And you're always like, well, I can't afford it. I can't afford it. Well, it's important.
I agree. Well, and so. We'll do some more videos on this, but I appreciate you being here today. So if anyone wants to reach out and get a little bit more information just on how to get the loan process started, where can they reach you at?
So Chris Lane, SunWest Mortgage. Mm-hmm. My cell phone's 410-241-0443, or Christopher.Lane, Lane, at swmc.com.
Awesome. And of course, if any real estate needs pop up, the Lee Tessier team of eXp Realty is always here for any of those questions. And we'll see you guys soon with our next credit conversation on getting a mortgage done.
Thanks.
You.